So, if someone is playing AI today, it's not a mistake to bet on the leading companies for now. And so that means, Nvidia and, other tech names around that. So I think the market is getting all that right. And they're getting the power right and the need for things to support the expansion of data centers. But what they have to be mindful of is the correlation of all that is 1.0.
Mm-hmm.
Like they're all going to stop working at the same time.
Mm-hmm.
But I don't know when that date is.
Subscribe now for daily Nvidia updates.
All right, let's turn to shares of Nvidia this morning. They're turning lower. They were up in response to the quarter, but they did turn lower once the market, I think, started to really digest the potential prospects for 20% tariffs on imports from China. Here to help us break things down is D.A. Davidson's Gil Luria and Cantor Fitzgerald's C.J. Muse. Gil has a 135 price target. He's neutral on the stock. CJ's at $200, and as you might imagine, given that price target, has an overweight. Gil, let's start with you. Tariffs are making you look smart right now, but I wonder, what do you take away from the quarter that didn't give you perhaps more confidence in the stock and the performance in the future?
I actually don't think this has a lot to do with tariffs. The stock was already down also after the close yesterday, because this is as good as it gets for Nvidia. Their big customers increased their spend the most into Q4 as they ever have and probably ever will. Two of their three largest customers have said CapEx will be flat into the first half of the year. It's as good as it's going to get in terms of China. Whether or not tariffs matter, there will be more restrictions on sales of chips to China, so those sales are going to be under pressure. And then it's as good as it's going to get in terms of margins. With their current accelerated product introduction cycle, every time they get to 75% gross margins, a new product's going to drag it down back to the low 70s. So they've done phenomenally well. They're still doing well this year, but this is probably as good as it's going to get.
All right, good as it's going to get, says Gil. CJ, what's your response?
Nvidia remains a dominant force in the AI market, and investors betting on industry leaders like Nvidia are making a logical move. The demand for data center expansion continues to fuel Nvidia's growth, but there's a key risk to watch. The correlation between these tech giants is extremely high, meaning they could all face downturns simultaneously. Despite Nvidia's strong performance, concerns are rising. The company's recent dip reflects investor anxiety, not just about potential 20% tariffs on Chinese imports, but also about broader growth limitations. Nvidia's major customers ramped up their spending heavily in Q4, but that surge is unlikely to repeat, with two of Nvidia's top three clients expecting flat capital expenditures in the coming months. Growth could slow. Additionally, Nvidia's impressive 75% gross margins may face pressure. As the company accelerates its product release cycle, new launches tend to bring margins back down to the low 70% range. While Nvidia continues to perform exceptionally well, the signs suggest this recent surge may represent a peak in its current growth cycle.
Yeah, I think it's a thoughtful view, but one that I completely disagree with. We are in the first stages of the Blackwell ramp. They were able to ship $11 billion in the quarter, or 1/3 of total data center revenues. And that's the fastest ramp in the company's history. I think very importantly, they are supply constrained. I think part of the gross margin miss is the fact that they have these supply chain issues. Also, pricing from TSMC went up on Jan 1, so they have to mitigate that. But if you think about this Blackwell product cycle, I think you're going to get a July quarter where you get a re-acceleration on the top line. And then we're going to go into Blackwell Ultra in the second half. And then we're going to have Rubin very quickly in the first half of 2026. So I think the data center growth story is robust. I think gross margins will push to 75% exiting the year. And as long as they continue to deliver more and more value, drive down the cost of compute, I think that enables AI to become more ubiquitous. Data center will grow again in 26. And the moment the market has conviction on that growth in 26, stock will continue to work.
Yeah, I notice you have a $6.80.
Nvidia's data center growth remains strong, driven by the rapid success of its Blackwell ramp, the fastest in the company's history. Despite supply constraints and rising costs from TSMC, Nvidia's upcoming product cycles, including Blackwell Ultra and Rubin, signal continued momentum well into 2026. This sustained innovation keeps Nvidia firmly positioned for future growth.
Earnings target for calendar year 26, but you say, and people can back into a multiple from there. But CJ, you say as well, clear upside to $8 or more when all is said and done. What does that mean when all is said and done?
You know, if you can get to the 300 billion kind of number for next year, that's where, we would underwrite that larger EPS number. But I think very importantly, if you believe in the 650 to 7, you're buying a stock now at less than 20 times next year's earnings, which I think is incredibly attractive. I would say, though, that the main question out there is just whether 26 will be a growth year or whether we will have a digestion year. And, I think we'll have visibility to that around the late May, June timeframe, given kind of 12-plus month lead times for Blackwell. And so I think Computex Taiwan will be a very important kind of inflection point where I would expect Jensen will keynote again and that he will offer a view. And I think the moment the market kind of can underwrite another growth year is when the stock can work again. Because quite frankly, the report we got last night was basically in line with buy-side expectations. So what we want to see is that accelerating second derivative and really start to see upside to numbers. And, that's going to be the second half of 25 and into 2026.
Gil,
Nvidia's gross margins are expected to reach 75% by year-end, driven by improved computing efficiency and growing AI adoption. Analysts see potential earnings reaching $8 per share, making the stock attractive at its current valuation. The key factor now is whether 2026 will bring renewed growth, with clarity expected at the upcoming Computex event.
what do you think about 26 in particular, as CJ just said? Growth year or digestion year?
It's far more likely that it's a digestion year. To get to CJ's number, you'd need to add $80 to $100 billion next year, with at least two of the customers already telling us they're probably at plateauing in terms of CapEx. Microsoft and Amazon have already said it. Google will probably say it by the middle of the year. So without their biggest customers increasing spend probably at all, it's very hard to see them adding $80 to $100 billion of revenue next year.
With major clients like Microsoft and Amazon signaling flat CapEx spending, 2026 is more likely to be a slowdown or digestion year for Nvidia rather than a strong growth period. This makes hitting aggressive revenue targets increasingly challenging.
What about all the geopolitics, the fact that it's been such a sensitive sector and the Trump administration has picked up right where Biden left off in terms of restrictions and adding new ones on China? Gil, do you think that's a big problem or an overhang for the stock and part of the reason it hasn't really done much over the last 6 months?
It's a very big overhang. Jensen Huang visited the White House a couple of weeks ago, and we don't know what he promised. Usually when these CEOs have visited President Trump, they came back with a big announcement. Tim Cook with a big investment. Mark Zuckerberg added Dana White to the board. We don't know what Jensen Huang promised. We also know that there's already legislation that was coming for further restrictions on sales to China. This administration's more likely to be even more severe with those restrictions. And yet the company yesterday said their guidance and their expectations assumes no change to the regulation. So that will continue to be an overhang, at least until we know what the administration intends to do. Let's not forget, Nvidia has taken the tack that we don't know how much we sell in China. We sell to our resellers in Singapore, and we don't know what they do after that. The Biden administration said that's unacceptable. It's hard to imagine the Trump administration is going to accept that type of approach, that they don't know what who resellers are selling to, and therefore it's fine to sell into China.
Guys, going to leave it there. Appreciate both your insights. Thank you.
Thank you.
Geopolitical tensions remain a major concern for Nvidia, with ongoing U.S. restrictions on chip sales to China creating uncertainty. While Nvidia's recent guidance assumes no regulatory changes, tighter restrictions could still pose risks. Jensen Huang's recent White House visit has added speculation about potential compromises or deals, leaving investors waiting for clarity on how U.S.-China policies may impact Nvidia's future sales.
Let's get more on Nvidia's report on the state of the AI trade. Stifel's Ruben Roy joins us now. Ruben, great to have you with us here on set. What did you make of the quarter?
You know, within the context of all the moving parts going into the quarter, I really don't think it could have gone much better. I think Jensen and company, laid out the vision, laid out the plan for the rest of the year, and I think, things really went well. You had technical issues for Blackwell, you had the DeepSeek event, you had tariffs and all kinds of things, and then, the overarching theme of how long is this CapEx cycle going to happen, or how big can it get? And we went through December quarter earnings, and every hyperscaler raised their CapEx pretty much, right? Google went to $75 billion for the year, up from consensus expectations in the low 60s. So I think it went really well. Maybe a couple things we could nitpick on, margins and otherwise, but overall, I think it was a great quarter.
So why do you think the markets are so skeptical? I mean, I imagine that today was a very busy day for you. You spent all day talking to investors and clients, et cetera, about this slide into the close.
Yep.
How skeptical are people of the AI story at this point? Because it's obviously Nvidia didn't say anything. Jensen went full court press. He did the conference call, then he did a 20-minute interview on CNBC, and the stock still slid into the close today.
Yeah, I think I heard the term, shoot first, ask questions later. And, I think there's a lot of jitters in the marketplace. I mean, kind of what's next? We've got this event. Probably, there is a little bit of a de-risking, which is great. But then what, right? So in our view, we've got a catalyst coming up in a few weeks' time. NVIDIA's going to have their big tech conference, GTC, which I think is going to be really interesting in terms of product roadmaps, technology, and otherwise. But, until then, what are we playing for, I guess, short term is sort of what's I think in the market today.
Nvidia's latest quarter performed remarkably well despite multiple challenges like technical issues with Blackwell, deep-sea concerns, and tariff uncertainties. Major hyperscalers, including Google, increased their CapEx projections, reinforcing strong AI investment trends. However, market skepticism remains high, with investors showing caution despite Nvidia's positive outlook. Upcoming events like Nvidia's GTC conference could be a key catalyst, offering more clarity on product roadmaps and future growth potential. Now, if you found this video valuable and you want to diversify your investments beyond traditional stocks and bonds, I have just the thing for you. Even though I believe that investing in a low-cost index fund is the best long-term investment for the average Joe, the benefits of solid physical gold are hard to deny. I think of physical gold as insurance against unpredictable times, and I'm not the only one. In 2023, central banks added over 1,000 tons of gold to their reserves, the second highest annual purchase in American history. And in 2024, central bank got another 290 tons of gold in just the first 3 months of the year. If the biggest banks in the world are buying tons of gold, I'm sure there's a good reason for it. I found a company that allows ordinary Americans to own and securely store physical bars of gold as part of their IRA account. The best part is that they're giving away a free guide to teach you all about investing in solid physical gold. If you want to learn more about how gold can protect your retirement savings, just click the link in the description to receive a completely free gold IRA guide.